TSMC, Taiwan Semiconductor Manufacturing Company, just released their latest quarterly earnings. And by the way, just so you know, it could have well been named Texas Semiconductor Manufacturing Company because a long time ago, before Morris Chang actually moved to Taiwan to start this company, well, he worked for Texas Instruments, and he could have very well built it in the United States if the US was willing to help. Oh, what a difference that would have made. Anyways, the results for the quarter were pretty good. Comments for the coming quarters were good as well, so the stock is up 2.2% right now. Of course, yesterday on Wednesday, on the back of the ASML results, plus comments from the Biden administration, but also from Donald Trump, stock was down closer to 8%. Majority of the chip stock, let's say, took a hit. Intel was flat-ish. Global Foundries was green. Why is that? Well, because everyone that could compete, let's say, or could be considered competing with Taiwan Semiconductor was actually given a little boost yesterday. Donald Trump basically said that TSMC took a lot of chips from the United States, well, potential chip jobs from the United States, and now that everything, or more than 80%, is being made in TSMC, he would like to change that if he becomes president. So of course, you can understand why TSMC was down, but the other ones were up or flat. Anyways, year to date, the stock has been performing quite well. It took a hit last year, but year to date, stock is up 65%, has a market cap of over $800 billion, forward PE 24.1 times, so really not that expensive for a company that is as strong as TSMC. Analyst estimates, I know some of you think these are worthless. I agree sometimes, but it's always good to know what the market is thinking here. Growth for the next coming years, top and bottom line, looks quite well. So overall, if you could be buying this company on the dip, I think it's a good opportunity because I don't think that TSMC is going anywhere, even if the focus will be going outside of Taiwan. They're also building in the United States. They might be building in Europe in the future as well. So yeah, I don't think they're going anywhere anytime soon. So if you can buy it on the dip, I think it's a good idea. Anyways, before jumping into this earnings report, if you enjoy this type of videos, leave it a thumbs up, subscribe if not, really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Let's start with a couple of comments here. Our business in the second quarter was supported by strong demand for our industry-leading 3 nanometers and 5 nanometer technologies, partially offset by continued smartphone seasonality. We've been hearing about that for a couple of quarters, but there are some positive signs ahead. Moving into third quarter 2024, we expect our business to be supported by strong smartphone and AI-related demand for our leading-edge process technologies. We maintain the forecast for the 2024 overall semiconductor market, including memory, to increase by about 10% year over year. So overall, these were the results for the quarter. Net revenue came in above their guidance, $20.82 billion. That's up 32.8% year over year and 10.3% quarter over quarter. Gross margin came in at 53.2%, also beating their own guidance, but it was down 0.9 percentage points year over year, but up 0.1 percentage points quarter over quarter. Operating margin 42.5%, up 0.5 percentage points year over year and quarter over quarter, and net profit margin coming in at 36.8%, down 1 percentage points year over year and 1.2 percentage points quarter over quarter. Return on equity 26.7%, very respectable. As for revenue by technology, 7 nanometers 17%, 35% coming from 5 nanometers and 15% from 3 nanometers. 3 nanometers, as you can see, quarter over quarter has been increasing, and of course, if you actually look at the whole pie, you can clearly see that they're still making a lot of money from older technologies. And this is the beauty of a foundry. This is something we've been talking about for quite a while. And this is why I believe that if Intel can achieve to get to the second place, right, in the world behind TSMC when it comes to foundry, I think it's going to be one hell of an investment because you're investing a lot. You've invested billions and billions of dollars in building the foundry, in building those new technologies, etc., etc. But it doesn't mean that once you're done or once one technology has become, let's say, outdated, that nobody is going to use it anymore. No, as you can see right here, still 9% of the revenue comes from 16 nanometers. 8% comes from 28 nanometers. So you can continue to generate revenue from all the technologies for years and years to come. And again, that's the beauty of a foundry. Moving to revenue by platform. So here again, majority here, HPC is 52%, smartphone 33%, although it's down 1% quarter over quarter. Previously, it was down way more, so we're seeing a small recovery there. DCE is up 20% quarter over quarter, Internet of Things up 6%, and automotive is up 5%. As for guidance for the next quarter, they expect revenue to be between $22.4 and $23.2 billion, gross profit margin to be between 53.5 and 55.5%, and operating margin coming in between 42.5 and 44.5%. So of course, quarter over quarter already doing better. I'll add here a couple of comments. So Wei said that over the past 3 months, the company has seen AI and high-end smartphone demand from its customers compared to 3 months ago, leading to increasing overall capacity utilization rate of 3 nanometer and 5 nanometer process technology in the second half of 2024. TSM continues to expect 2024 to be a strong year for the company. Analysts here already commented, in no surprise, TSMC reported a blowout quarter due to strong AI chip demand and expected resurging growth from Apple with the AI iPhone. TSM forecast not having the capacity to meet demand through 2025-2026 is a sign that chip demand definitely hasn't peaked already. And I fully agree, although we've been talking about AI for quite a while, I think there still is the wave of consumer devices coming up. And so right now, looking at the stock, of course, we've had that big red candle, which was yesterday, which also means that on an RSI basis, we're not overbought anymore. We were closer to the 50-day moving average at $166. The 200-day one is still far away at $135. We're now closer to the 20-day one, which sits at $178.47. Now, whether you want to chase it or not is up to you. But remember, TSMC is probably, with ASML, one of the strongest picks in the semiconductor market. Now, of course, there will always be the headlines that might hurt these stocks. But again, the headlines hurt the stock. I don't think that the headline will hurt the business in the long run. I think TSMC is of extreme importance for the United States and for the world. So I highly doubt that any administration now or in the future will do anything to actually hurt the relationship between TSMC and US companies. And by the way, most of the US companies use TSMC. And so without the US companies, TSMC will not be generating a lot of revenue anymore. And without TSMC, the US companies will not be getting the highest end of chips either. So they need each other. I think the headlines are headlines created to generate clicks and views. If you think that TSMC will go and disappear or be broken up or whatnot, I think you are misinformed. I think TSMC will grow in the United States, maybe in the future also in Europe. And even though I'm an Intel shareholder, I know very well that just because you're spending a lot of money to build a foundry does not mean that you can compete with the people that are working at TSMC. You need training, you need knowledge. So unless they steal employees, engineers, you name it, from TSMC, it's going to take a long time for any company to actually take over TSMC's dominance in that market. So overall, good quarter, good comments, good company. Stock, if it can go down lower, I think it's a blessing for all long-term investors. That's about it for me in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, and I'll see you all in the next one. Bye-bye.